What's going on, Juco?
We're back. Man, how y'all feeling? I know some of you have been like, Jeremy, where in the world have you been? And why haven't we been trading? Well, we have been trading. And with some things happening and taking place within the market right now, currently, there's some things that you have to decide when it comes to putting capital at risk. And what I learned is every day of what we may think or feel may not be a day of what we may need to trade. And the reason for that is because if we're not if we're not taught to have discipline, if we're not taught to be able to preserve capital, may not be a day of what we may need. Then how are we going to ever get better? So give me 1 second while I get us prepared and ready for today. Give me 1 second to be able to do that, because we got something good that's going on for today, and I'm excited. I'm excited for what's to come on today. All right, so we here with it. How are y'all feeling? I hope y'all are feeling good, man. This right here is different because we're not doing any live trading on today, right? This is not us live trading, giving out signals on today. We did not trade today at all, period. We kind of let the market play itself out based on what we already knew what was going to happen and take place within the market. So that was already done. There was no need for me to be able to do anything extra. outside of what it was of what I already knew was kind of going to happen. So I just allowed that to play itself out. I allowed that to play itself out so we can be where we are right now, currently being able to shift our mindsets just a little bit to put us in position of where we need to be. Okay? So you say, Jeremy, what is that position? What are you talking about specifically? And for me, that is understanding long-term investing, the timing within the market, right? Time is your greatest asset to building wealth. Time is your greatest asset to building wealth. It's your greatest asset. There's no asset that's better than time. Most people don't have time to do anything. When you ask a person, hey, let's do this, let's do that, the one thing that stops them is time. I don't have the time. I can't I can't fit this within my schedule because they lack the time. So when it comes to investing, the reason why you can't allow your money to grow the way that you want it to grow is due to what? Time. So what I'm going to be showing you today, right? This is going to be a series of what we're going to be doing. And what I'm going to be showing you throughout this series is, for one, we're going to understand time, and we're going to understand positioning and how to build on our position, and watch how it plays out over time. So when your time is being controlled, it's kind of hard for you to be able to manipulate the time within your favor because your time is already being controlled or manipulated. And when your time is being controlled and manipulated, it controls your finances, it controls your savings, it controls how you do things because you're caught up within what's happening throughout the time, this specific time. So, what's up, 186? Let's get it, man, for real. So, the reason why we didn't trade every day this week, like we traded last night, right? We traded last night. We traded the Qs on last night and was able to catch uh, a move on last night in Asia. And we posted that, right? We posted that last night. And we posted that also on our TikTok. But every day is not a trading day, especially when you are awaiting for things to happen and take place within the market. Sometimes, even though you may see and you know when something is going to happen, you don't necessarily have to trade it. Allow it to play itself out so that you can be on the opposite side of what you know is going to be happening after this plays itself out. Like, we know the market was returning back to uh new week opening gap. That's what we're trading into right now. We marked that out 2 days ago, and it's coming into fruition today when we were on here talking, right? How many of you all remember when we drew out? And I'm gonna go to the charts real quick for my everyday traders. How many of you all remember when we drew out this green box? Y'all remember when we drew out this green box and we talked about regular trading hours and how we said, hey, we have a gap here and we're going to trade back into this gap. How many of you all remember that? So if you remember us talking about this gap, what is happening? We're literally trading back into the gap. So I knew this was going to happen. I just did not trade it. I specifically chose not to trade it because I wanted to wait to see at some point, are the things it is or what I see actually true? And when they play themselves out, it gives me more confidence within self to know that it is. I don't have to play guessing games. So when it comes to long term investing, we talked about a few things, right? We talked about establishing some level of capital that we will have in order to be able to trade. We talked about that. Us being able to have this capital, we have to now have knowledge and understanding as to what to do with this capital that we have. And one thing that we don't want to do is place it in the bank. Because when we highlight this, Chase Bank savings accounts pay a standard rate of 0.01% APY for all balances. We have to figure out a different way, a different route, so that our money is always working for us. Always, at all times. But how do we get there? For some of us, it's through trading. From some of us, it's through us still having our 9 to 5, right? So, say for instance, if you are a person who still has your job, and there's nothing wrong with that, but you still have your job, and you're looking to be able to build with what you have to become now disciplined within your own mind because you're only going to defeat yourself at this point. Jeremy, what do you mean when you say be disciplined within my own mind? Meaning that when you get paid and you take out $200 per paycheck, $300 per paycheck of what you can to sit to the side up until you get to $1,000, $2,500 of money that's saved that you know not to touch. No matter what happens, I'm not going to touch this money. It is as if it does not exist. When you be disciplined enough to operate like that, then you'll be disciplined enough to build out an actual portfolio to invest long term. Because the timing, this goes back to us talking about time in the market. Whoever has the most time in the market is the person who becomes more successful within the market. If you have a short period of time in the market, you may be quickly to go into a drawdown phase because you don't have the time that another person has had in the market. So if I came in, like, what's an example of that? Well, let's go to an example based upon the charts, right? We're going to keep this strictly based on the charts. So if I was a person who invested into one of the number one companies in the world, which is Nvidia, you do understand that Nvidia is one of the number one companies in the world, if not the number one company in the world. Some of you may say, "Oh, Jeremy, no, it's not." Well, this is what I have to say to that. Because I want you to be able to understand how this works, how long term investing works, and where you should actually have your money in of what's real versus stuff of what's skepticism unknowingly. Nvidia is the number one company in the world right now today. Some of you would think it's Apple, but it's a flip or flop between Nvidia and Apple. But right now, Nvidia sits above Apple. And I'm going to show you. Top assets by market cap. All assets, including public companies, precious metals, cryptocurrencies, and exchange traded funds. Those are your ETFs. Okay. Gold is the number one asset in the world with a $31 trillion market cap. Gold, $31 trillion market cap. And it's at $4,500 right now per ounce. Per ounce. Nvidia, which is the number, that's gold is the number one precious metal. Nvidia is the number one company in the world, followed by Apple, Google, silver, the second largest precious metal with a $3.8 trillion market cap, Microsoft, Amazon, TSM. So what are you seeing here out of these that's in the top 10? What is one thing you could point out that's in the top 10 with these companies here? All the companies that are in the top 10, what is it that I could point out that stands out to me? Well, the one thing that stand out to me that I can point out is the top companies in the world that are in the top 10, three of them build semiconductor chips. Three of them build semiconductor chips. Techs and commodities rule the world. Absolutely. But three of these companies build semiconductors. That's Taiwan Semiconductor Company, TSM, Nvidia, and who's next on trying to get on board and building their own? Who has not purchased from Nvidia? That's some homework right there. And then we have SpaceX, right? So ruling in the skies is going to be a thing. So this is what we're going to do. If we are if we are now looking to be able to invest and want to invest long term, where do we start? Because a lot of us feel as though we're behind. The only person who would say you're behind is a person who's already been in the market long, long term. I personally wouldn't say you are behind. I personally would not say someone is behind because artificial intelligence has not been here for 30 years, 10 years per se. How old is Chat GPT, Open AI? Open AI is what controls all your Chat GPTs, Gemini, and all them. Open AI is an open source for artificial intelligence to be able to be used. So Open AI is 10 years old. 10 years old. How old is Bitcoin? Crypto. How old is crypto? I want to say about 15 years. 17 years old. So crypto is coming into its grown stage, right? Where we say at 18 years old, you grown, right? At 18. Open AI is only 10 years old. So the newness of what's happening and what's taking place is still fairly young. So you can start building long term wealth just off of this knowledge right here. So for the next 10 years of your life, Bitcoin would then be what? 27 years old, reaching a 30-year mark. Open AI will be turning 17. No, 20. 20 years old. So think about the growth of what this can have if you start right now today and you prepare yourself for the next 10 years. This is long-term investing we talking here. We're not trading. We're talking long-term. We're talking building positions. We build our positions, and when we build our positions, we don't hit the sell button. We don't hit the sell button because we're building on our position. And for some, that's going to be one of the most toughest things you're going to have to get through. And I completely understand why that will be tough when you are in a position of where you sometimes need money fast. You need money quickly. But that's where I say you have to develop other skills to be able to help you create that capital for what you need long term. Jeremy, what's an example of that? An example of that is operating from an entrepreneur standpoint. If you are a person who has a job, use your job. A job was never meant for you to be there forever. You have to use it to put yourself into position. It's a stepping stool to get to where you need to be. That's what a job is there for. Those people who can't figure out their way, they end up having to just retire from the job at 65. But we want to use it as a stepping stool, giving ourselves a game plan. When I was working at Cobb County Water System, I gave myself a full game plan as to what my next 9 years were going to consist of. I had 10 years before I became invested into the company. They changed the mark from 7 to 10. So since I knew I had 10 years, I had 10 years to prepare to put myself in position to walk away at the 9.999 mark before I vested into the company. And I knew I didn't want to do that. I wanted to take my money and walk away. So what I did throughout that time frame was take each and every day and opportunity that was given to me, the same amount of time that I gave the company, I had to give my own personal self that same amount of time in building what it was of what I was going to be doing. Whether that was Jeremy Sports Network, because I started doing media, Jeremy Sports Network. I was building Jeremy Sports Network, JSN Boxing. I was building that. Once I saw that that chapter was done, I moved into a newer phase of where I tapped into real estate. And then it just fell from, things just started happening of me building the businesses of what I needed to sustain me to walk away from the job. So having the trucking company, my trucking company did it, real estate did it, my marketing company did it. I created those avenues to be able to sustain me. And that's what I am trying to show you today is take advantage of time because it is very precious and it can go by very, very fast. So for one, if you are on your job, use this as a stepping stool. Use your job as a stepping stool to get to where you want to be. That means become more disciplined. Yeah. Become more disciplined within your finances, where you know you're going to be setting something aside to not even touch that it's not even there. Soon you get your check, boom, it's gone. Create an account where you can have that deposit just go directly into a whole nother account that you don't even see. You can go to your job and do that to where you can have them deposit money into whatever accounts. That's you going to HR and getting the deposit slips and filling out your routing information and distributing your cash on how you want it to go. Once you do that and you establish that savings, now we move into the charts of how we're going to build positions and what we're going to be building positions on of what makes sense long term. So now let's tap into what are those things that I can invest into that's not built around hype. What are those companies? Well, let me ask you a question. What are those things that you use in your house consistently that you don't even pay attention to every day? What are some of those things? Think about when you washing clothes, you're using detergent. You washing your hands, you're using detergent, bleach, all those different things. You're not even thinking about this stuff gonna always be here. You're not even thinking about that. This is what's always going. This is in everybody's household. What are some other things that's in everybody's household that's always being used? Because once you able to see it, you will not be able to unsee it. I promise. I'm going to show you a company, and most people don't even know that this company exists. Of where you could be investing into for things of that nature. But Jeremy, what are those things, man? I'm gonna give you a company because right now they are in a beautiful downtrend, which means we're gonna have a opportunity to have a chance to build a position around it because it's going to be long term. It's going to be here forever. It's one of those companies that's is not going to stop, right? because people need this stuff in their house each and every day. So, so let's talk about this company, right? Let's talk about this company. This company that I'm going to show you is this company here. How many of you know about Procter and Gamble? Put a one in the chat if you know about the company Procter and Gamble. For those of you who don't know, Procter and Gamble is a massive American multinational consumer goods corporation. They're headquartered in Cincinnati, Ohio. It makes household cleaning items, personal care, and hygiene products. How many of you knew that? Here's their major brands: Tide and Gain, Crest and Oral B, Pampers, Gillette and Braun, Charmin and Bounty, Head and Shoulders and Pantene, Dawn and Cascade, Vicks, Pepto Bismol. I guarantee you, you have this stuff in your house. If I'm lying, I'm flying right now. And I still see myself attached to this seat. You have this stuff in your household right now. You do. You got to brush your teeth. You got to wash your clothes. You're going to wash your hair. If you get sick, you're going to need some Pepto Bismol for stomach ache. You're going to use some Vicks Vapor Rub. You're going to be using these things. So if I'm a person who is looking to build a quality portfolio, wouldn't I want to build something around consumer goods that I know people are going to always be buying and purchasing? So now I'm going to go to the chart. And when I look at the chart, it's like, oh, okay. It's trading at $143 right now. It had a high of 180. So I need to find what? Myself an entry point. Is this my entry point right here? Because look, this is holding. We're looking at this on a weekly chart. This is where free game is given right here. You ain't paying for this information. I only ask you to hit the like and subscribe. You ain't paying for this. I'm showing you a strong level of support. But hold on. I'm going to go all the way back. A strong level of support. Based on that strong level of support, the one thing that I want to be looking at is, Jeremy, explain to me where on earth, right? Where on earth is this holding the most support? Where? Because once I see it, Jeremy, I don't want to unsee it. Where is it holding the most support? Because once you start understanding where it holds the most support, then you're going to look at it from a totally different scale. Totally different scale. So let me show you something here. Let me move this out the way. This green box that we have right here served as a point of support for how long? That means every time price reached this area, we bounced, right? But I'm going to show you something that's going to that's going to give you a different perspective on this as a trader, because I need you to turn on both your mind as a trader and your mind as an investor, right? We got both of them on at the same time. We just understanding that we're not thinking from a short-term perspective, right? Because trading is short-term. So we want this to be a long-term perspective. So when I go and I look at how long has this level served as a strong support, right? Strong support. I'm going to date this all the way back to 2021. And it has lost this support only once, right? So from October of 2021 to where we are currently right now today, it has held this level of support. Well, I'll say this. This has been a real true level of support for 1,757 days, first and foremost. Now, how long has this truly held this support without failing? Meaning every time price comes back and reach this area, it does not fail, right? Now, that time frame has been from when price came back and visited in May of 2023 to where we are right now has been 1,190 days. Mm. So you saying, Jeremy, buyers have been stepping in right here every single time price comes to this point. We are now trading below the 200-day moving average on the weekly with Procter and Gamble. This orange line serves as a 200-day moving average. This blue line serves as a 50-day moving average. You just now entered a death cross on the weekly. When these two lines cross each other to the downside, we call that in trading, we call that a death cross. This is a death cross. So there's more potential room to go to the downside with us being trapped in this death cross. So now we have to identify the key levels of where we're going to be hitting next, of where we have some support. Where would that next level be? Right here at the past 200-day moving average, where it could potentially come down to here, reaching 135, 136. And if that fails, albeit that we hope that it does not, right? We're down here at 121. So if I'm a person who's wanting to invest long term into this, because think about what we talked about just 2 days ago. And it was a reason for me to hit around it. If somebody would have reacted that same day, they would have made money. So when I come to you with this information, this uh intellectual property, utilitarian value, it's a reason for it. It's a reason. I'm not coming to share something with you that don't make no kind of sense. It's utilitarian value behind this. If we start trading, if I'm looking to be able to build position, in which this is good for me too. I'm gonna be adding more to my position with Procter and Gamble being able to go through this pullback on the death cross on the weekly. I'm looking at these levels. So what I want to do is set me some alerts here. We're gonna do this together. I hope you have your charts open as you're paying attention to me, so that you can be able to mark your charts the same exact way. Because now we gotta get you in a place of understanding how to build your charts, so that you can be able to read your charts correctly, so that they're able to work for you and you're not working for it. So if I'm looking to build position, deep capital, long-term capital, look at that OTE. What did we talk about just 2 days ago when I told you all, when I talked about this green line, when we were talking about crypto? I said I want to find my entries here at OTE levels. Every look at where we've been bouncing around. Have we not been bouncing around OTE levels? Where if we were to slightly lose OT level a little bit at 136.66, that's possibly where we could draw to. We want to see if we could get some key level of support there, where price starts testing this area of where it pulled back to. It start retesting this area right here. Let's see if this strong enough to come right here. It's just slightly above below our OTE zone, because we got wicks that came here. This is what we're looking for. So I'm a person who's going to be paying close attention to this. And since I'm going to be paying close attention to this, Jeremy, what are you going to do? I don't have to sit here and look at this on the chart every single day. You know what I'm going to do? I'm going to add an alert right here. And this is what my condition is going to be centered around. That once price hits here, I need to be notified every single time that price is trading right here in this zone. Once it taps this zone, that's a buy for me. I don't even have to think about it. My alert is already set. Now I can move on with life. Just like we finna move on to the next thing. So 2 days ago, we were talking about Bitcoin. Did we or did we not talk about Bitcoin? And what happened? We're looking at it on the weekly now. What happened? I talked about having a strong base, Bitcoin having a strong base, where buyers kept holding this price level right here, right? They kept holding that price level. For what reason? How long has this served as a level of support? How long? This area has served as a base for Bitcoin. It has served as a base for Bitcoin. For how long it has served as a base? We already talked about this, guy. Price retraces and come back here, right? We're going to take from here to where we are currently right now today 777 days. Matter of fact, more. I'm sorry. We forgot that. That's down there. I like to be a little bit more accurate. I want to be a little bit more accurate. 903 days. So for 903 days, this has been a strong level for Bitcoin. We talked about this. Sellers did not push, were not able to push price down. Once price came and touched this 200-day moving average, sellers has not been able to push this price down for 200 days. 196 days, 200 days, give or take. They have yet to push price down. So the day after we talked about this, the next day, Bitcoin takes off. This big candle right here has everybody thinking what? Bitcoin is back. Bitcoin is back. And you felt left out. Some people felt left out because when they start looking at their phones, they see, oh man, Bitcoin done went up to 72,000. It was just at 50 some thousand. I missed out. You ain't miss out on nothing. That's FOMO. But what it has been doing is showing you, hey, we got a nice strong level of support right here. What I'm paying attention to is seeing if we can crack above and get this 50-day to start doing, even though, we can't control it, but look at where the cross happened at. This is why I tell people, this is where the bull run was right here of what you miss. If we just playing solely off of moving averages on the 200-day and the 50-day, right? And I'm trying to identify what has happened and taken place. I'm seeing it. I'm seeing it right here. October 2023 was its lowest. Was the low of when Bitcoin hit. I could show you something of where this trend is very repeatable thus far within Bitcoin. Jeremy, no, you can't. Let's do something. I'm gonna show y'all something of value. I'm gonna open up today. I want to open up today because if I open up to you and start showing you these things, I'm gonna give you the tools of what you need because not only will you be able to have this for your long term plays within stocks, you're gonna have it also for crypto. You're gonna be able to know when to invest, when not to invest. So a little bit later, I'm gonna open up to show you the things that's around here. But what I wanted to show you, the reason why I went to Bitcoin, we're gonna go back, we're gonna go to cryptocurrency and do cryptocurrency. I just wanted to show you a structural base and why this move happened. And we talked about this. So price is hanging on around 200-day moving average. We seeing the 50 and the 200 getting ready to possibly have a collision course, go on a collision course. If the 50 and the 200 day cross, we get a death cross here, then we're still bearish. That means the bottom is not in yet for Bitcoin. This is just a move up to the upside. That candle does not scare me. Yes, some people made money or whatever who invested in around this time frame, but that candle does not scare me. I need to start seeing it creating higher highs and higher lows before I do anything. So let's go to our second initial investment. Our first initial investment is going to be consumer goods, right? That's why we worry about consumer spending. So if you are invested into consumer goods, when you have your person like Kevin Walsh come up and he's talking about things that you don't even think matters to you, but it does. Consumer spending, US consumer spending reached a record high of 16.8 trillion in the second quarter of 2026, accelerating a 3.2% annualized growth rate. However, retail sales dropped to 0.6% in July of 2026, the largest decline in over a year, signaling that higher gas prices, inflation, and fading tax refunds are beginning to constrain household budgets. I, I need to know how consumers are spending their money. I'm a long term investor because if I could understand economically where money is flowing and where money is going, and what how we are being affected as an economy, I can now tap into the markets to be able to go and see what's happening. So that means if we had higher gas prices, that means that I should have been putting capital into what? Because now I'm finna teach you how can you trade as you're investing to be able to add to positions. So if I'm understanding consumer spending and I see that retail sales dropped 0.6% in July, and is signaling that we having higher gas prices, inflation, and fading tax refunds, where should my capital have gone? Where should my capital have gone? I just want you to look. Like I said, I hope you got your charts put up because I'm gonna show you how I'm built. I'm already my watch list already is set for anything that I want to trade. Any asset. If we moving into higher gas prices, that means I should have been looking at something like what? Chevron, Exxon. If I didn't get these individually, I could have got the ETF XLE. You see what the trades are? Once you understand where sector money is being moved, what where the money is flowing into which sector, you're now going to know how to invest and when to invest into these sectors. I told my family, I'm going to create this as a highlight to show them. I sent a message out to my family. I'm going to tell you the date that I sent this out. Let's go back. Let's go back. So I want to show you this. I had this conversation with my family. I sent this out and I told everybody that I love them, and because I always want to see my family win. So I told them on July 2026, July the 23rd, right? So look, let's go to the 23rd. Let's drop down to the daily chart. And I'm going to highlight the 23rd. I'm gonna place uh a arrow there. I'm gonna place an arrow on the 23rd, right? July. The 23rd was a Tuesday. Look at that green arrow. Was a Tuesday. This is finna get crazy. I told them, hey, here's the text. I'm gonna show you the text right here. Men lie, women lie, but real truth does not lie. Here's the text that I sent my family right there. Hold on. There you go. I'm putting it on the screen. I'm gonna read it. It says, with oil rising to now $100 a barrel. This is when oil was at $100 a barrel. Gas prices will keep rising, and the dollar being strong, tech stock will most likely fall. Look to make some money in the energy, minerals, and gasoline sector. Smart money is now rotating into these sectors. A few names: Chevron, Exxon, ConocoPhillips. If you get them separately, if you can't get them separately, just grab XLE ETF. Love y'all. I told them before the trade happened and took place. This was the trade that I gave my family. They would have been up, they would have made 22% on their capital. They would have made 22%. Let's look at the time frame. Jeremy, how long? 56 days, they would have made 22% gain on their money. 56 days. Show me somebody else who's going to bring you 22% gain on your money that's in your that you're connected to. You don't have another asset that's going to be able to show you how to add 22% gain on your money. But while you're having it sit in a bank account, right? While it's sitting in a bank account, what is it earning? It's still earning that 0.01% APY. Let them cook. I'm cooking right now. Knowing where the trades are going to happen and take place is a whole different skill set. That's value. That's value. That's true value right there. I gave them the signal on July 23rd. July 23rd, I gave the signal. And if they wanted to, right now, they could walk away with 22% gain on their money taking profits right now, today. That's short term trading. That mean they could have took that capital, right, and added to a longer term position so that it can continue to build more. So that mean that, hey, if I take some capital from of what I grew here, knowing that we moved into this sector, I can take capital from here and add this capital to Procter and Gamble, so that when Procter and Gamble starts to turn back up, when Procter and Gamble on the weekly starts to turn back up, guess what? I'm still making more money. I'm banging at this point because I'm growing and building my wealth. See, people talk about trading but don't actually understand that it's a macro thing. This is macro. Macro, meaning that you have to know what's happening on the macro level before you can scale down into your micro levels. If I understand what's happening within the econ, that's why it's important for the for you to pay attention to the Fed meetings. It's important for you to understand why Kevin Walsh is he cutting rates? Did the Fed decide to cut rates? Or what are they doing? Quantitative easing, quantitative tightening. I need to understand the terminology of 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 how the financial game works so that I can be able to play the game the correct way. I'm trying to get to millionaire status, but I can't get there if I lack the knowledge and understanding. And when so many people who you be around, if they lack the knowledge and understanding, they're going to be the ones who are afraid because they don't understand the information, and they be the ones who are left behind. So when I cut that, I'm going to cut that piece out of this video, and I'm going to send that to my family. And I'm going to say, who took trade when I gave us the signal to invest into these companies? Who took the trade? Who is up 22% on their capital right now? I want to know. It wouldn't be anything wrong with asking that question, but they will be able to see the value and have the understanding of who knows what he's talking about when it comes to money, when it comes to finances. Because I don't play the game to lose money. I'm building wealth in a real way. We are in one of the most hardest economic times that some people have faced, and we're not even in a financial crisis yet. Keyword yet. Jeremy, what do you mean? What are you saying? When we enter into those type phases, the impact is very significant. People are crying for short-term pain of what we're experiencing right now and wanting to blame Trump for that. I'm not here to push Donald Trump or anything at all, period. I'm not either red or blue. But what I'm here to say is that having understanding of macroeconomics, you will understand that this is short-term pain for long-term gain. Real significant pain has not stepped in. We would need a black swan event for something like that to be able to happen and take place, like back in 2008. Here's an example of that. Let's go to the charts because I don't want to just, y'all know me. I don't just talk about it. I got receipts. I have receipts. Hold on. Those are government bonds. Let's go back to 2008. I don't know if you all remember when the housing market crashed in 2008. 2008 housing market crashed under the presidency of Barack Obama. That's why it's important to understand who your leaders are, what is happening, what is the reason as to why we are suffering within what we're suffering at this time frame. Just having true understanding and knowledge of that, right? It's not about picking a side. That's why I tell people I could give a damn about who's in office. What does the charts tell me? Economically, what does the charts say? What is happening within these times of where we're in? I don't care who's in office. What is the charts? What are the charts telling me? That after the war, and this can be a historical snapshot for you to be able to have after we have wars that happen and takes place. After the war under Bush, Afghanistan and all that stuff with Osama bin Laden and all of that crap, Saddam Hussein, all that stuff, right? That craziness of what happened during that time frame. Once Barack Obama took office from President Bush, the economy suffers from what the past president did. So so it's like this. Okay, what Trump is dealing with now is from what Biden did while he was in office. So if you felt like we were in glory days when Biden was in office, that was because of what was done in 2016 when President Trump was in office. I need you to understand how this works. When choices and decisions are made based upon who is in office so that you can have understanding when you see when you trying to understand macroeconomics for your long-term investments. That's why people say it's so risky to invest in things because they don't understand macroeconomics. It's a real thing. So Barack Obama took on George's Bush economy, and when he took on George Bush economy, he took on something of what happened post-war. So we had a crisis that happened and took place after 2008, and that was the housing market crash from what happened during those wars under President George Bush. It took Obama 2 terms to get us into a recovery state. And then once he got us into a recovery state, we stayed steady, right? We stayed steady until what? COVID, which was an anomaly. That means that something that was not supposed to seep in, but it came, right? Couldn't control it. That's why we had a small dip right here in 2020, 2021. But look how quickly we recovered. So look how long it took us to recover after the housing market crash. We were down to from 2008 to 2013. It took us that long to recover from what happened during this post-war era. After this era of wars, it took us that time to recover. The anomaly in what I said with COVID, look how short period that was. That was a short-term period from 2019 to 2022. That was a short-term play that gave us what? We quickly recovered back into higher a higher cost. So that means that President Trump and Barack Obama, both of their errors, I mean, yeah, when I say errors, not ERRORS, but ERAS, their terms was in good standard until we got hit with a world crisis real quick, but we quickly recovered and look at how higher we went when it came to interest rates. The anomaly came in with COVID to give people, look at the housing, look, the housing market, you could have been refinancing your property at 2.6% nationally. Nationally. Most people don't understand that. So the recovery of what has happened, look how steady we've been going since then. You now just had a death cross on the weekly, and you're sitting right at the top of the 200-day moving average on the weekly with this. And you can see the indicator is pointing like it wants to do what? Like it wants to come down. So if you're a person who's saying, "Oh man, I want to buy a property," da 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 da, if you were buying during this time frame right here, you don't understand macroeconomics. Period. Point blank. And sometimes during this time frame, man, I did so many because I do. I'm a notary as well. I did so many loan mods during this time frame right here. And I was like, man, if people understood macroeconomics, I know the times are hard, but if they really truly understood, they would just wait to get the best rate. But they don't understand this information. What I'm giving you is utilitarian value that's going to help you with building your assets, with help you building wealth, so that you can be prepared for anything that comes. I'm making you recession proof at this point. That in the worst times of our suffering of what people may say, oh man, this is times are hard and it's hard to come by with food. Guess what? You had plenty of opportunity to make money. You just didn't know where to go make the money at. I had to humble myself in the sense of being like, once you gain this type of knowledge and understanding, and you start having simple conversations with people, simple conversations, and they talk about how hard it is and what's happening during this time, you know, and you begin to try to share some wisdom and some knowledge so that they can be able to understand that there's another way. Let me show you another way. But because mentally they're so defeated and they've been scammed, especially within my community. In the black community, our black people have been scammed from other people who consider themselves black leaders, or whichever the case may be, have been scammed and bamboozled for so long that they just tired. People just left Invest Fest, right? Wanting to learn how to invest. They're going there learning all this information. Bro, it's I'm gonna tell you, it's the downloads, man. That's been coming. For it's a reason that I had to pause us uh trading wise, because I was getting too fixated on trading. I was like, man, trading is one of the most, that is a skill set that's added as the cherry on top, but we got to build a foundation. When we don't have that foundation, which if you ever look at the foundation of how a house is built, that rebar, the hardest thing of building a house is the foundation. That's the hardest part for a contract. With the rebar and everything it takes in order to lay that foundation so that foundation can be strong and you can build on top of it. I want the trading to be the cherry on top. The day trading aspect of what we do, that's the trading on top. But I want the the foundation of what we do be built off of this, of understanding true macroeconomics. Because when they says you made me rethink some things when you talked about being in a situation of where you wanted to be able to make money for your family. And I was sitting here thinking, I was like, man, I can show you a fast way, but the same fast way of me showing you this could be the fastest way you could lose it all. Because day trading will do just that. You can build a buffer and you can lose it all. And then you will feel defeated from that because of the day trading. It will take you there. It will put you through this type of cycle right here. It will put you through this type of cycle right here. I kid you not. So when we were winning, right, we haven't taken any losses yet. But as you're winning in trading, you start to build up belief, right? Because at first you were in a little bit of disbelief. This is the psychology of what you went through with me, of where we are right now. Without us having to build a foundation yet, the disbelief was when you asked the question, "Hey, what's your win rate? Do you win?" And I was like, "Man, I only trade based upon statistics. You know what I'm saying? Of the probability high setups of what I see in the market. I trade based upon those, but my win rate is high enough that made me profitable and changed my life to be able to do this every single day, where I could go and make money if I need to. I could wake up when I want to or whichever." You was in a little bit of disbelief. Now, that first trade come, you had some hope. Then you went into optimism, right? Of us winning. Then you were in belief fully after a couple of wins under our belt. Then you felt that thrill and euphoria once we kept winning. I don't want you to fall into where we hit that next phase of complacency. Then anxiety gonna start seeping in. then denial, then you're gonna start panicking, capitulation, then you're gonna be angry, and you're gonna be back in disbelief again. And that's when we're losing it. But I gotta build that foundation because you're tuning in to trust that I help lead and guide you in the right direction, right? So as we're trading, I have to build that foundation so that you could be able to know, hey, my trades and my day trades are only good as we continue to win. I need to still be able to know what to do with this capital so that it's not sitting stagnant. What is the next play? Because I need my money working for me. I have to work myself out of this place of where I am. How is that going to work? We got to build that foundation. That foundation going to come through you understanding I need to build me a portfolio for long-term investing so that now that I have my portfolio, as I'm winning in my day trades, that's the capital of what I need to invest into my long-term portfolio. And now my long-term portfolio is now going from $1,000 to 10,000, from 10,000 to 100,000. You're going to start multiplying gains because at that point you got time in the market, you built position, and you're consistently adding to that with the day trades. And you're not trading every single day because you wouldn't have to. But we got to build a foundation first. So I had to go back to the roots of what got me started. Understanding true macroeconomics, understanding where money flows, where real money flows, institutional money, boys with big capital, billions of dollars, where that money is moving to. Because once I understand where that money is moving to, then I already is nothing for me to make money. Period, point blank. Simple. I was only asked about win rate because I was looking for a mentor. Life has taught me to focus on the craft, not the results from the game. I honestly never had a disbelief in you. No, oh, and I appreciate that. I appreciate it because I'm the same exact way. I kid you not. When I first got into trading, and I was looking for a mentor, my the person who was my mentor at this time, I still to this day can't tell you who this person is in real life. And I know you saying, what? I couldn't tell you who this person is in real life because it was just a picture of this individual. And his name was Mr. James. And I don't know how I came across this WhatsApp, Telegram, whatever information. I don't know how I came across it, but I started to trade with them, and they were overseas company. They didn't have any KXY or any of that at all, period. Even with the program of what we were using. So the program of what we were using, we had to upload money into, right? And we basically traded at specific times, like 7 o'clock PM was one of our main times. And then we traded like PM session at like 1 o'clock or something that was like that. So between 1 o'clock and then 7 o'clock. So during this time frame, I put $40 in first. I didn't know who this individual was. So we started trading. And at this time, I was so green. I'm gonna tell you how green I was. I was so green that I was trading without a stop loss. I was literally trading. I didn't even understand trading. I was just wanting to make money so fast. I was trading without a stop loss. And I got so caught up in the euphoria of us winning, like I turned $40 into 5 grand, and then I ended up losing all of that 5 grand. I was like, whoa, what? Wait a minute. Then I end up doing it again and lost the 5 grand again. I am now down 10K. And I was in a position, my son, my he's a senior now in high school. My son can come right here next to me and tell you and share with you because he saw me go through that I was in one of those phases where I was broken. Trading has took me into the lowest depths of where I think a person could go. When they say you really truly have to redevelop self mentally because it shows you who you are, it exposes your true character, your true nature as an individual, whether you're a person of greed, whether you lack discipline, it shows up in your trading. So for me, I became very complacent, like how we saw on that chart. I became very complacent with what we were doing and felt comfortable in it, and it took away from my from me having the educational aspect attached to it. So because I didn't have a true mentor teaching me, because we would go lot like Mr. James, once we started trading, what he would do, and mind you, I never heard this person voice at all, period. This is all text, us catching signals through the text. But what he was sharing, he did teach about moving averages. Like he would give some education every time of us trading at that time, but it wasn't the true education of what was needed in order for me to be able to understand you need to be trading with a stop loss, bro. What are you doing? I was just so happy to make money and felt like I know we're gonna make money every time until I started losing. Once I started losing, that became deposits to my education in the game, and I walked away from him solely. It wasn't his fault on why I was losing, but I had walked away, and I walked away at the right time. I took my money out of the account. Right. Once I had went back and I understood some things, I was like, well, let me go back to, start trading with them and I could start implementing the things that, of what I've grasped over this time. That site was shut down. I said, man, think about all those people that he had on there. If they didn't take their money out, he would have took all their money. It was by the grace of Yah that I was not stuck in that. Yah pulled me right on up out of that. And that 10K loss of what I took became deposits to my education in the game. That's why I said it's going to take you investing something in order to be able to get it truly. For me, it cost me 10K. I don't know what that is, but I said, man, you know what? From anybody who come across me and I'm able to help them, I'm going to give them all the tools and resources that's needed. It won't cost them 10K at all, period, because it's going to come with a lot of free game. Yahusha taught free game to to those that followed him. But it will take some little bit of investing to be able to understand stuff from a macro standpoint and have it to where you can see it with the physical. That's why I have those tools and resources so you could see it with the physical of what it is I'm saying, and you have that as a tool that you added to your game. So anytime you come into a place of where you're trying to understand something and I may not be available, you can refer back to that tool. I could go and pull this. Oh, he got the ebook on this on our trading model and concepts. I could go and pull it. Boom, boom, boom. That's right. I could go and pull this. Oh, we got the crypto knowledge right here. Oh, he created a cheat guide to the crypto knowledge. Boom. Let me go and grab that. I need that because those are tools that I can have and use, and I can always refer back to. Boom, even while they ain't there, and it'll help me be able to see it as I'm taking in the information and I'm soaking up the information. I also have, because I'm a hands-on type person. I gotta have it. I gotta logically. I gotta see it, have it in my hands physically, so that I can be able to use it to refer back to. Because this right here is like next level information. This is this is information that they don't tell, they will not share this information with you. Even Warren Buffett himself don't share information like this. He just talks about it. I kid you not. Warren gonna talk about, he gonna talk about the market. He just gonna tell you to buy. He ain't gonna tell you what to buy. He's just gonna say buy. Buy this, buy that. I bought this, I bought that. So people gonna be thinking, oh, let me follow Warren Buffett indicator. But they don't understand how long Warren Buffett been in the market. So you're thinking you're gonna get the same gains as Warren Buffett. You have got to be mistaken. It don't work like that. All right, so back to the charts. So understanding macroeconomics and where this can help us to determine how we want to purchase assets, homes, multifamily investments, things of that sort, where we could catch the best deals, right? So if I'm a person who is investing into multifamily, it's okay for me to buy up here, right? It's okay. Because once price comes back down, I'm able to refinance and pay my investors back at a cheaper rate as an investor in real estate. If you are in real estate investing, you could go back and find me on Facebook 2019, type in Jeremy Flanagan real estate investing on Facebook. It's going to pull up all my real estate investing videos where I was trying to teach people back in this time frame where they was having fear in 2019, 2020 of real estate investing. And guess what? They missed out on all these gains because they didn't want to hear it. They were too afraid of what was happening within COVID to understand macroeconomics. They didn't understand the historical snapshot. That's what's up. You learn through conversations, questions, lecture style. That's what's up. That's a true way. That's a true way. So people were afraid back in 2019, 2020 when I was doing all of this on Facebook. You could go back. That's why I said I keep receipts. They were afraid during this time frame. We catch a double bottom, boom, price goes bananas. And people wondering, man, why are you so chilled in life now? Because I made all my money right here. I literally built wealth in a short time frame quietly. And I tried my best to help other people during that time, but they did not listen. Everybody was so quick to be on the get rich quick scheme and they got scammed. So everybody who was doing all the scamming now, you could literally go to Instagram and be able to see it, especially here in Atlanta. Who everybody was running to, who was showing them glitz and glamour, the flashiness, the cars, the houses, like all that. They was showing all the glitz and glamour during that time frame. And the people who were paying attention to the glitz and glamour stuff put their money into these people. Now these people are going to jail for Ponzi schemes and scams. It's all over Instagram right now, especially in the black community in Atlanta, Georgia. All of them. And I was like, man, so many people got bamboozled because they didn't want the information like this. Like how you're getting this information 186, they don't like information like this. They because they got microwave minds. Microwave, quick. Social media has put us into a place of where we got those scroll mindsets, and we trying to have a scroll mindset when it come to building wealth. Quick. We need something that's quick, fast. So those people who looking for the quick and the fast are the ones who actually are missing out on how to do it in real time because they wanted to be quick. And then when it comes quick like that, they get burned, and then they want to be upset. But it is what it is. So we now understand macroeconomics. If we want to start getting into asset building, we have a chart of what we need to go off of to be able to understand our macro crisis levels and where money starts transitioning into. So when you go and you look at the housing market, right? When you go and look at REITs and you wonder why, man, why REITs haven't taken off yet, man? Look, here, I'm gonna show them to you. Pay attention how my watch list is built. When you go into these REITs and you're looking at companies like Invitation Homes, like these are real estate companies, and you're wondering where's the trend? There's no trend. We're not going up, we're not going down. We're just consolidating. Where's the trend? Oh, simple. Because when I go to the 30-year mortgage rate, I see we're in consolidation. We don't have a trend going up or down. We're stuck into consolidation right here. So with us being stuck into this consolidation, it's a reflection on the market at this standpoint. When you're looking at it from a higher time frame, these assets are not moving. If I was looking into something like how we're seeing this right here, Simon Property Group, they've been trending. There's their low. They've been trending. But that mean I would have had to been involved in this back in 2020. That goes back to what you would have done back in 2019, 2020 to be able to feel some significant gain from that. Or if you got in March 2020, 25, once these lows were seeping in, if you would have got in during lows, then you would have made something. But if I was a person, I would be wanting to be in right here. So every time this dropped, I add to my position. Drop, add to my position. Drop, add to my position. Add to my position. And at this point I'm making serious gains. But in this industry, as of right now, there's no real true movement. Everything is stuck in consolidation. So that's why no institutional money is flowing here. That's why you don't see no big trends. You don't see there's no money flow. This may be a couple of more years, maybe 1 to 2 more years, to where we start seeing some significant change within real estate, because that's not the focus right now. The focus on real estate usually comes when? Post war. Right now we're in war. So until we have post war, then we worried about real estate. We worry about the truth, because real estate is what affects the economy. The main thing of what's affecting us right now, from a macro standpoint, that it pertains to real estate, is commercial real estate right now is where the banks are suffering. I'm not gonna say we're suffering, but the banks are suffering from commercial real estate. And the reason for that is this: when COVID happened in this sector, when COVID happened and a lot of people had to work from home, businesses were paying rent to these commercial properties to the bank, right? They were paying rent to the bank on these commercial properties. And once they started having their workers go home and they no longer had these buildings being used, and they're looking at their balance sheets and they're like, man, we're paying so much money for these commercial properties that we're hosting our people in, and we got them working doing the same job from home. I'm no longer choosing to pay this rent anymore. So who now suffers from that? Because once the loan was created for them, it was done through the bank. So that means the bank had to put up the cash, who owns the property, for them to be able to, and they pay that money to the bank to be able to pay it off. So if they no longer are making payments to the bank is now suffering, and they're holding on to an asset that's not making them any type of money. So the industry either capitulates, consolidates, and then drop. And once it drops, the bank goes into what we call bail in, where the FDIC only insures 250,000, where that means that they can go into your account and recoup their money back of what it is that they lost. See, people don't know that part yet. So you say, Jeremy, you got to show me that. Banks have absorbed tens of billions of dollars in actual realized losses, not unrealized. That means they had to eat this as a loss. So don't think for a second that they're not going to get their money back. They're going to recoup their money, and I'm going to show you exactly how they're going to recoup their money back. Banks have absorbed tens of billions of dollars in actual realized losses and are managing roughly 132 billion in distressed commercial real estate debt. with billions more in provisions for potential future loan defaults tied heavily to remote work and high interest rates. I'm telling you, this information that I'm giving you is next level for macro to understand how you can benefit and go to the next level. This is why I said we're not in no times of where we behind. Oh no, we ain't late to the game. No, we're not late to the game. We just got to understand the game and know where the game is to be able to know where to play. Where do I plug myself in the game, coach? The quarterback done came to the huddle and called the play. I gotta know where I gotta get open so that I can catch this pass and go and score. Or I could tote that rock and get to the end zone. Banks have absorbed tens of billions of dollars in actual realized losses and are managing roughly 132 billion in distressed commercial real estate debt, with billions more in provisions for potential future loan defaults tied heavily to remote work and high interest rates. That's on the commercial side. That's on the commercial side. And those are realized losses. Those are now realized losses. That means that they had to go ahead and accept that loss right there in real time. I have a video where I could show y'all this on YouTube where there's a conversation that is happening amongst amongst these high leaders that are talking about. Let me see if I could pull it up and play it. Let me see if I can pull it up and play it. I may only be able to play the audio. Let me see if I might be able to pull it up and play it. Let me see. But it's this conversation that is happening amongst them, and they're talking about bail in, bail out. And they're talking about the risk of what they are having of what's going on now with these commercial losses. And what's crazy is I sent this out even to my dad. Let me see if I can find this. Here it goes right here. They were talking about if you had the right to know about what is happening and they could care in this video. You're going to be so pissed, and this is why I said you have to use the banks as a middleman between you and your capital and understand that the power is back into your hands when they created the blockchain. But most people are so afraid of trying to learn how crypto works because crypto is the power of decentralized finance that's giving back to you, giving the power back to the people. But because traditionally our minds are so set up on understanding that we need the bank, no, we don't need no bank at all. We don't need them at all. We could just use them to be able to pay bills or whichever the case may be, but we ain't using you to be able to house any of our capital so that you can only insure up to 250K of that when you want to pull whatever it is you want to pull from us. And you only going to give us back 250K. So if I'm a person that got $1 million in the bank just had 132 billion realized loss, and they want to recoup from that 132 billion of what they lost. You know who they pull that from? people who got their money in the bank and they only give you back 250,000 because that's the only thing of what's FDIC insured. And if you don't believe me, do your homework on that. So let's play this video. I'm gonna play this video of where they was having this conversation of if you had the right to know this. These are your elites talking here of people in position who control the game. They're having this conversation. Let's see if we could hear this.
And your budget. Whether you measure affordability by price or value, it's both at WGU.
Who control the game?
About the institutions, and it's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge...
Let's start this over.
Should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that will charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public. I wondered whether
Hold
there
on,
are
let me start over. Let me start this over so you could, because now that you can see it, because I'm sorry I didn't have the camera on it, but pay attention to what they're saying specifically.
Should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that will charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
I wondered whether there are some market tests of whether you're being heard. And I think about TLAC. So TLAC should respond to good and bad news about the institutions, and it's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices. This is similar to what Jay was saying in the market that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
I'd like to go back to some of Dick's early comments. I do think it is hard to get a lot of demand for transparency right now in this sort of period of peacetime. But that is going to flip, and it's going to flip probably even faster than we saw in 2008, where the need for communications really quickly in the social media world to avoid disinformation, to have some holding patterns for things like, I remember in the early days of bail-in, people saying they're coming for my deposits, right? So just holding communications that you can pull out that are helpful to deal with disinformation, some very simple things, and how quickly you'll be able to deal with different constituencies. For example, as liabilities are further up and closer to harm's way, when are you going to be able to give them some comfort, if any? How do you deal with foreign operations? How do you communicate to some of those different groups? I think ex-ante preparation for the speed of scaling up and the ability to get information out to avoid rumors taking over the narrative strikes me as probably the place that feels like it's got the most benefit in a world where I think you've done a pretty good job of getting out the basics of Title II and some of the basic resources that are available now.
Way back in 2010, the Dodd-Frank Act, it's a matter of time too.
Most traders spend money before they know what they're buying. Think Capital lets you try the environment first, test the platform.
So that video, I kid you not, when that video dropped, I was like, yo, and this was a couple of years ago. I sent this same video to my dad because I was trying to put my dad on to tell him what was happening during this time frame. And at the time, people don't, they don't receive information very well when you're trying to spread this type of knowledge, So at the time, I knew I couldn't go to any of my friends because my friends did not like, my friends could care less. A lot of them did not have the capital at the time of, you know, caring too much about this. They still trying to make ends meet. So when I saw this, I was like, oh man, this is big. This is so big. And then what happened literally right after that was the fact that the banks started suffering. The banks were up. Well, they were technically down. Um, and I'm not gonna go and pull this chart, but on this chart that I used to have, it showed the bank were in before those losses became realized. They were unrealized. They were in $750 billion worth of debt, unrealized losses. Unrealized. And this was like back in 2022, 2023 when I had that chart. And that chart literally came off the FDIC website, not the FDIC, the Fed website itself. And I knew then, I said, man, something is going to take place that I need to be keeping my eyes on because that's not good. That's not good for them at all, period. They're going to have to find a way to recoup that. And it's going to take time. So what has happened is out of the 750 billion of what was unrealized at that time since 2023, 132 billion has became realized, with more of that money of that 750 billion still sitting out there that they haven't closed in on yet. But they have already eaten $132 billion loss. So it's like, okay, at this point, what do I do to prepare myself? Because you heard them say it in the video. I don't think we need to be telling the public this. Why would we tell them this information right here, which will scare them and they will run away from having their money put in the banks of what we need? We need another tactic. We need another way. They need another tactic and another way. What is that way? What's their other tactic of how they're going to recoup this money back? Because they're not going to do it in the sense of where they're going to alarm the public prior to them being able to do it. They're not going to do that. You know how they're going to put their foot on people's neck and start recouping money it is that they need to recoup? I did a video on this about your 401k. People who have jobs. People who have jobs and don't have an understanding of utilizing their 401k to their advantage, where they just allow their money to be invested into whatever based upon what the company decides. That's kind of putting your money in default at that point. And so one way of them being able to pull that capital to be able to help with economic expansion, right? Infrastructure of what's needed, of what's going to be happening and coming back here to America. That's the whole point of the tariff aspect. That's the whole reason as to why Trump said, hey, if these companies are not going to be coming, he's trying to make America great again. How is he going to do that? Well, he's going to force these companies to come back and bring business back to America, because all they did was outsource all their business. All they did was outsource everything of what they've been doing. Whew, outsourced. Apple outsourced to China. China's building iPhones. So you know what Trump said? No, 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 no. Bring that back over here. So now that they're doing that and bringing this infrastructure back here, the banks don't have that capital because they got 750 billion in losses. 750 billion in unrealized loss. Well, you could subtract 132 billion from that. So they got 132 billion in realized losses. They still have capital that's sitting to the side. And now that they have that capital sitting to the side, now they're sitting here trying to decide, okay, how are we going to recoup this money to be able to help build infrastructure? Because for one, we're not getting it consistently through the banks because the banks is suffering losses. People are holding tight to their checkbooks because because we're having this war that's happening and taking place. How else are we going to be able to create this type of money to be able to build the infrastructure of what we need back here in America? Oh, we got it. One aspect is 401k. We got to get our money back. So you're going to be prematurely investing into things that are going to help build their infrastructure back, and you're not going to be able to benefit from that at all, period. You're not going to make any money from this. These projects are not going to be very good to where they're skyrocketing and you're making money through your 401k with this. You're going to be suffering unrealized losses, and then you're going to want to look to be able to pull from your 401k when it is up, only to be able to get penalized. Them having that tax penalty clause within there. So here, that's just another avenue for them to be able to create money. So what do I have to do if I'm a person who is being stuck within the 401k? This is why. Hold on one second. Let me go and get it. This is why. How many of you know this guy, Robert Kiyosaki? Rich Dad, Poor Dad. Robert Kiyosaki teaches us that 401ks are a scam. He teaches that. And a lot of people don't agree with it. But he teaches you that it's a scam. And that if you would have taken that same money of what they're trying to put into your 401k, and you say, scratch that, I don't want that, and you would have put it in this, the number one asset in the world with a $31 trillion market cap, the number one asset in the world, because we got to get an understanding here and what a difference is between, look, Bitcoin is at number 12, right? But look, there's a difference between, I'm going to show y'all something. There's a difference between man's money, which is Bitcoin. This is man's money. Man created this cryptocurrency. Man, right? A person like you and I created cryptocurrency. But y'all's money, gold. The number one asset in the world with a $31 trillion market cap. Nothing can compare to what y'all's money, God's money, is the only real thing on this planet. If you would have been investing into that, just go to the monthly. You'd have been investing into that. You'd have been soaring for your family within wealth. Why you think gold is so prominent? Silver is manipulated. We already know about the silver, but you can still invest into silver. But silver is still manipulated. I would still invest into silver, right? I'm not telling you not to invest into silver, but what I'm saying is gold hits so different. And it's going to always rise and continue to rise because it's the number one asset in the world. We got to understand where we got to establish our wealth for long term, for our children. Think about the people in the year 2000 who was buying gold, who understood this information here in the year 2000, 2001, 2022, coming out of the dot-com bubble. And they needed a place to be able to put their money coming out of the dot-com bubble. We're in an AI bubble now. The bubble that we're creating right now, with NVIDIA being the number one company in the world, followed by Apple, Google, Microsoft, Amazon, TSMC, SpaceX now being up there, Broadcom. We are putting ourselves in this AI bubble of a play we already saw that happen back in the 90s with the dot-com. Oh, it's the same as that thing. This bubble is getting so big, and people are not going to have any type of understanding of where they, you know what they're going to be doing? Sitting on that fiat that has depreciated by 87% of its own purchasing price. They're just going to be sitting there holding that while everybody else who has the big boys, the big capital, you know where they're going? To precious metal, gold, the number one asset in the world. Why? Because it ain't going down. It's just going to continue to rise. It's going to pull back, have a relief rally, and continue to go up. And this thing is going to be so much more expensive. Look at it. An ounce, $4,500 right now. It had a high of $5,600. That means that high is eventually going to get taken out at some point. You don't think you can make any kind of money between $4,500 to $5,600 by starting to build your position now? Look at how much money these people have made from the year 2000. Who started to where it hit its high? This is how they got all this money. Saudi Arabia with all the gold. Like if you look at the top people who hold gold, right? It's America, China probably like third on the list or something like that. Saudi Arabia is like number 2 when you start rating who holds the most gold, right? America is number 1. We still hold the most gold, right? Which makes us still one of the richest countries in the world. But if they're doing this from a macro standpoint, why aren't we doing this for our families? They're building wealth as nations and countries, and we're not doing the same as that thing. So we got 2 ways that we can do it now. Because if we can't afford it right here, right now with gold, in which I say, hey, let majority of your money go here. This is y'all's money. This is his asset. That's what I mean by that. This is universal. This is here on earth. Gold. Bitcoin ain't on earth. That's a technology. Cryptocurrency is a technology created by man. That means that it can fail. Things that are created by man can fail. They don't last forever. That's why our old financial system is coming to a reset, because they want to implement their new financial system, which is with blockchain, ISO 2022 compliance. That's the financial reset of what we're going to be going through after this war. See, I can't play with it. I gotta give it to y'all in real. I gotta be for real. ISO 222 is a global standardized methodology for financial messaging used by banks and payment networks worldwide. It replaces older legacy messaging formats like Swift, MT with richer structured and more detailed electronic data. The purpose sets a common global language for payments, securities, and trade transactions. Major market infrastructures like Swift finalize the transaction for cross-border payments messaging standards. Enables better fraud detection, fewer manual payment errors, and faster transaction processing. Here's the misconception. Blockchains and digital assets are not natively certified or compliant by ISO organization itself, and its standard applies to institutional data formatting rather than coins. The aligned networks, certain crypto networks such as, what did we look up? XRP, Stellar, XLM, Hedera, HBAR, Algorand, and Cardano are labeled as ISO 222 aligned because their developer toolkits or bridging APIs support formatting rich transaction data compatible with traditional banking infrastructure. Whoa. What? 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 You mean to tell me, Jeremy, that our whole financial system is resetting? Oh yeah. And but the thing is this won't happen until post-war. Why you think at the Strait of Hormuz they were only doing payments through what? Bitcoin. In order for you to be able to transfer your goods and stuff through the Strait of Hormuz, you need to pay us in Bitcoin. Oh, this is why I said is the crypto intelligent cheat guide. I had all these listed. XRP, Stellar. We were looking, were we not looking at these prices, y'all, the other day when we was talking about crypto? Now we could go back to crypto because we now know the new financial system is switching, and I need to make sure that my hand is in the right thing so that I can be able to benefit from this. Look. XRP 2 is used for what? Cross-border payments. This technology is used for cross-border payments. You say you're buying all those now. No, but those are the companies that have the technology for cross-border payments for the new system of what's going to be in place. And you have an opportunity to get them for pennies on the dollar right now. Let's look at H-bar. Look at how cheap H-bar is. Spot. H-bar is not even $1. But you say, Jeremy, why is it so cheap right now? Why is it so cheap? Well, the reason why it is so cheap is because they're using this for cross-border payment. We're looking at the weekly, and you're getting ready to see a death cross on the weekly. That means you're going to be able to get this for even cheaper than what it is, because we're going to use our long-term mindsets. We're not going to FOMO into them early. We're going to allow the bottom to step in. Algorand. Look at how cheap Algorand is. Cheap. XLM. Cheap. All you got to do is put, this is me, right? This is me at these prices of where they are now. Imagine if you just put like $50, $100, all right, towards all of these. This is where I talk about what did we talk about? Oh, my bad. Full screen, my bad. I did not look at it. So let's go back. Let's start here. My bad. Let's start here. This is where I talked about when you build that crypto portfolio, how you want to be able to deploy your capital. When you talk about buying this stuff, this is how you want to deploy that capital. 25% of it is going to be in Bitcoin, because Bitcoin is considered a store of value. It's gold 2.0. It's man's money, right? Man's money 2.0, Bitcoin. So 25% of your capital is going to go towards Bitcoin. Appreciate you, 186, for telling me that, because I did not go back to switch the screen. I'm sorry. But 25%. So this is your digital gold, because we are in a digital phase, right? We're now moving and transitioning. This is why I said we're so early in the game still. We're too early in the game to not miss out on this opportunity here. So you have the best opportunity to do it now. For those who miss out on this wave are automatically going to get left behind. Straight up. Automatically going to get left behind. Because you wouldn't have no excuse after this. 25% in Bitcoin, store of value. 35%, look, where majority of that money going to be going. Large cap utility coins and smart contracts. Solana, Cardano, XRP, XLM. I told you it was all in my ebook. I didn't lie. I do not lie when I put this stuff together. That's why I said it's so important to be able to have the tools so you can be able to know. And when you're looking at it and you're ready to make your moves, you can double check yourself with the information and tools and resources that you have. Chronos, Polygon, VChain, Algorand, HBAR, Cosmos, Quant. You allocate 35% of your portfolio here. This doing it the right way. Then you go into DeFi. Then you go into fungible tokens, your NFTs. Then you go into your metaverse, and then the rest is in your low cap, your low micro caps, and meme coins. Understanding the game. It ain't too many people that's out there, man. That's going that understands this information. There's not too many that's out there. I mean, when they talk about the 1%, boy. Whoever follow me is a part of the 1% because you got the information. Now you know what needs to be done for the future. To put yourself in position. So this is the play of what I'm going to be doing. I can't tell you what to do, but here's the play of what I'm going to be doing. Full disclaimer. This is not financial advice. But here's the play of what I'm going to be doing. I'm looking for the bottom. I am looking for the bottom to seep in. And usually, here's the last gem of what I'm going to give before I walk away. You have to become a person of historical context to understand how things work historically. Once you understand how things work from a historical standpoint, it changes the game. Listen to me. It changes the game. Let me see if I can find my chart. I have a specific Bitcoin chart. Boy, look at this chart that I did this here on. Premium buy side, break consequent encroachment, change of character, fell into a discount. If you would have bought down here in the discount, you would have caught that move there. Oh my goodness. On the 200-day moving average. Who in the world charted this? When you know how to chart, boy, you know where the money at. But this is not the chart that I wanted. I have a chart that's in here somewhere. I don't know where my Bitcoin chart is. I think it's under my other name. It's not under this this here. I think it's under my empire, my Flanagan Empire. It got to be under here. But I'm not going to go searching for it right now. Let me see. I highly highly doubt is on here. I want to find it because I have all the historical information on here. I might have to pull it up for you all on next stream. Oh man. Nope. It's cool. I can find it on next stream. But here's what I was going to say. Let me get out of this and go right back to where we was here. Here's what I was going to say. There is something that you have to pay attention to, and I talk about this time and time again. I put this in there. This is in the ebook too as well. I'm gonna show it to you all. Let me go to it first. This is going to help you start thinking from this standpoint. But I gotta find my chart though. And I'm gonna show it to y'all on the next live. Okay. Darn. It's about as hard to find the information here too. See if I can find mine. I gotta go. I gotta dig deep, y'all, to give you this information that I've had years. I'm going into my safe. I'm going into my safe. Here we go. Here's our new one. My new ebook, right? So this is the updated version, right? This is the new version. Like when you purchase now, you're gonna be purchasing this version here. This is the new version. And in the new version, I got this chart in here. Look at this chart. Jeremy, what's this chart? Look at this. From 2012, 2013, 2014, 2015, 16, all the way to 2021. All the way to 2021. All the way to 2021, you have seen bear market, bull run. Bear market, bull run. Bear market, bull run. Your green signifies bull run. And it happens every, look, 1, 2, 3, 4. 1, 2, 3, 4. 2021, do the math. 2022 is 1. 2023 is 2. 2024 is 3. 2025 is 4. The last bull run was in 2025. 2026 signifies what? Bear market. 2027 is what? Let me show you what we say. Bear market, accumulation. That means 2027 is where we're going to be accumulating our cryptos. That means the bottom has not stepped in yet. The bottom, based upon my tracking, won't hit until October 5th, based upon historical context. October 5th. It happens in cycles. Jeremy, what do you mean it happens in cycles? What I mean is this. Every 1,064 days of transitioning between the next bull run, after the bull run, you have 1,064 days that happens and takes place within the market before we hit accumulation. You accumulate for 364 days. Then you move into Bitcoin halving. Then you move into bull cycle. Then you go through another 1,064 days. 1,064 days. The next 364. Then another 1,064. And then another 364. So if we're following and tracking this historically, that means that day 364 of us being in this bear market and time for us to accumulate won't drop until October 5th. Boom. That's your birthday? October 5th? Is that your birthday? What? Wow. That's Look, it's a reason why you're here. It's a reason why you are here and you are tuning in right now at this very present moment. It is a reason. It's a reason. You have until now, and alignment, facts. This is prophetic of what I'm finna give, of for like just being dead serious right now. Being dead serious. From now until October 5th of this year, man, you got to get it. You got to get everything in alignment. You're getting yourself in alignment. The next phase of your life after this moment, you finna be walking in prosperity. Wealth and prosperity. This is facts. This is facts. Because you're gaining all the information and tools of what you need to be able to get you to that next level and over the hump. You're getting it all right before that opportune time to hit. You're going to already know what to do. The tools are laid out and bestowed before you. All you got to do is now pick them up and use them and start building the empire of what you want to build. 2026. Accumulation is going to be in 2027. 2026 Bitcoin bottom should be hitting in October 5th, 2026. The bottom of the bear market should hit in 2026. Then we go into accumulation. That's where Bitcoin goes sideways for 1 year. Then it takes off. Here's an example. I'm gonna show you. 2013 was the bull cycle. 2014, right? So let's look at it on the real chart. Let's look at it on the real chart. Let's go back to 2013. That places us here. Look at this green arrow. Right? Green arrow. That's right next to my head, right here. (2013) bull run, right? Look at the bear market. At the top, bear market. Bitcoin goes down. Boom. Bear market. That's 2013 bull, 2014 bear. Look at October. November, the bottoms, January 5th, 2015, the bottom hits. So you have 1 year of bear, and then 2015. So let's do this. So from the top, right, to the absolute bottom, that's 413. From the top to the absolute bottom. And this is BTC on the weekly. Okay. So we could say around 214. Some charts is 364. So basically within that 1 year time frame. We still within that 1 year time frame, right? 1 year. That absolute bottom came in January 15th, 413. Then we go into, so this is considered the bear market. We'll put bear right here. Once we come out of the bear market, we move into accumulation where Bitcoin goes sideways. And look how long the sideways movement occurred. So once the bottom stepped in, Bitcoin goes sideways. Bitcoin went sideways for roughly 266 days. I would put this around 300 and so odd days until it started creating a new high. So let's go until it created the new high. Here. So that's 294 days, right? So that's accumulation. That's what we call accumulation. This is where you accumulate. This is where you start putting your money. You start buying as much crypto as you can. You got about a year to do it. You should be racking up rackades as much as you can, working, trading, being able to build it as much as you can. Then we go into what we call a Bitcoin halving. Bitcoin halving. You say, Jeremy, what is a Bitcoin halving cycle? A Bitcoin halving cycle is right here. The Bitcoin halving cycle is the BTC halving cycle is a key part of the 4-year crypto market cycle. It happens approximately every 4 years, reducing the block reward for miners. This event often precedes a bull market phase with reduced supply, driving increased demand and price growth. While the halving plays a significant role, other factors like adoption and regulation also influence the market. So, during the halving stage, right, that's going to come after accumulation. So, coming out of 2015, we enter into 2016. This is our halving. This is our halving cycle where you should be seeing some gains from what you did in accumulation. And after the halving, which would be what? 2017, this is where the bull run happens. And the money that you invested during accumulation, that shit goes on a parabolic phase, and you literally put yourself in position to take your life to a new level of where you don't go back to what you used to be, doing the same things of what you used to do, making the same money of what you used to make. You have now put you and your family into a position that is like no other. Crypto gave you that. Crypto is giving people life-changing opportunity, but they just don't see it. And what's different about this time around? See, this is at the beginning. This cycle has repeated itself. It repeated itself here, bottom in 2020. It done repeated itself. You done hit the top here, go back into the bear market, bottom around here, accumulation, right? Bitcoin halving, parabolic bull run. That's 2025. Now look at where we are. People asking, did the bottom come in yet? I don't think so. I don't think so. So you ain't missed out on nothing. We're not even in accumulation yet. We're still in the bear market. So while we're still in the bear market, what we're about to see, and you can see it, is this 200-day moving average getting ready to do what? Which takes this down. So that means price can potentially come here to around 40 some thousand for us. First is gonna start here and then be moving its way on down. So that means I still got time. If that parabolic phase, if the cycle repeats itself, Once we get this cross, because all price is going to do is rallying up to be rejected by the 50-day. It's a rally up to be rejected by the 50-day. That's why I said, oh, I'm not a person who would catch FOMO into this. Look, once you catch the 50-day, you get a rejection, breakdown, crossing, price goes down even lower, accumulation, halving, bull run. It's once you see it, you don't unsee it. 12-month accumulation investment plan for BTC starting October 5th, 2026 through 2027. Bingo. Bingo. We could walk away from that. We could walk away from that. But not only for just Bitcoin, accumulation for building your portfolio. Building your portfolio, your crypto portfolio. Jeremy, why not the stocks right now? You know, why not add stocks into it? I would say you could still trade stocks, right? I would do some long-term plays on my stocks, right? But when I look at the stock market and I'm looking at stuff like the NASDAQ, we're in a bull run already. That means that when you had your entry point to buy in April, if you missed out, you had another entry of what you could have gotten in March. You missed out, price is driving down again. Hopefully it drive down itself deep enough to be able to gain another entry for stocks. But as of right now, I'm sitting on my hands. If that's me. If I'm not already in the market right now, let me sit on my hands and just accumulate as much capital as I can, whether that's me trading, me running short-term investment plays based off of macroeconomics. What are those short-term investment plays? The plays, like I said, with me knowing the shift of what was happening with gold. I mean, not gold, with oil. I knew the shift of moving into gasoline. I'm following the sectors. That took how many days? 56. 56 days to build. 22% on my capital. So I could be accumulating as much capital as I can, sitting on the sideline, waiting to deploy my capital into building my positions through my crypto portfolio, which give me parabolic gains. I'm not going to get those parabolic gains of what I want in the stock market because we're already in a massive bull run. We've been in a bull run since 2023. Massive bull run since 2023, December of 2022, 2023. Massive bull run. So that's what I will be doing. But this is not financial advice. Y'all already know. So we're going to end it there. We're going to end it there. We will be back. My bad. We will be back.
Hey, it's Brooke Alex.
I don't know why I keep pushing play. But we will be back to be able to dive a little bit more deeper within the crypto aspect because we still got some stuff to break down that's there, which I think is going to be really, really cool as we get prepared to be moving in this phase. We're going to be tracking this thing We're going to be setting alerts for all our key assets of what we want with it, with all of them, of the right crypto assets, not anything of what people try to hype us up on with meme coins or whatever that crap is. We ain't worried about that. We worried about the right investments to put our money into, and we have those. So as we get ready to deploy capital into those, we're going to be tracking them, and we're going to be tracking them together. We're going to build this massive portfolio together. We're going to do it through investing in the right places and at the right time, following this thing throughout to be able to make life-changing capital, working our way to millionaire status. Simple. We got the tools, we got the game, we got the knowledge, we got the understanding. All we got to do is execute at this point. It's all about execution, patience, and execution, discipline. It's going to take all those to get over the hump and get to the next level. This is where you prepare your mind mentally for sacrifice. But I'm sacrificing for the long-term aspect. The long term. So I have opportunity now. This is why I said you're not too late. You're not late at all. You're actually early. I'll be trading live again. Tomorrow is TGIF. So I will be back live again tomorrow. We're going to be trading TGIF tomorrow. Matter of fact, before we go, let's take a look real quick. Because I wanted to see some things play out within the market before we hop right back in. So based on our wins, oh, let me put this up. So here was last night. That was our win on last night right there. So I did trade Asia. So sorry by not giving out that Asia signal. When I took this trade on last night, we traded Asia, made some good money on Asia last night. But you see, it was a quick snap up to the 200-day, took profits, got out. And so you could see price action pulled itself all the way back down to this gap of what we were talking about, which we may end up taking all the way out tonight during Asia and London. I want to see this entire gap get filled, at least 50% consequent encroachment of this entire gap here. Oh, my bad. Darn, I'm doing it again. My bad. Doing it again of not showing the chart. So here we go. Here's the trade from last night. Asia session. There's the trade there. We're looking at this on a 15-minute intraday. So here's the trade from last night. Asia. You can see we were just coasting around the 50-day on the 15-minute, right? We went, took out that high. Once we took out this high here, we didn't necessarily take it all the way out, but I knew this high had to get taken out. The high didn't get taken out until 2:45, right before London open. This high gets taken out. Once the high got taken out, think about it. I was asleep at this time, but once London opened, we could have shorted London and held that bad boy all throughout New York and would have made a dumb bag. I'm talking dumb. Real dumb. But we went to sleep. So this is what I thought was going to happen. When I took this trade, I was targeting this high here last night. I was looking to take profits at this high. But price never eclipsed that high and took it out. So once it didn't take that high out and we ended up creating relative equal highs, let's move that to here, where we created relative equal highs here. These highs had to get taken out. By this time, I done went to sleep because the high didn't get taken out until 245. Once the high got taken out at 245, boom, that was the signal for short. And we could have shorted this bad boy all night back into this gap here. But I'm looking for this gap to be filled at the end of the night by Asia, by the end of Asia. Maybe perhaps London. Maybe we trade a little bit higher to snatch some liquidity up here and then start trading lower. Or we may just open up and just take out this whole gap completely and then look for a reversal for us to start going back long again. So I wanted to wait for this to play itself out because I knew the shorts came in at 245. So I was like, you know what? I'm not going to trade this morning because we actually missed the real trade at 7 a.m. Because look at the rebalancing of what we got here. We get a bear flag here, 7 a.m. Boom. That's the distribution of what we wanted, right? That was a beautiful trade up until 8:15 this morning, 8:45. And then if you look at New York session, this is why I didn't come with no bullshit on trying to trade today. This is where you got to know when to hold them and when to fold them. I knew when to fold once I saw this nasty price action right here. Look at this. Look at this shit. Like, we were not going to trade this, guys. I would have not put us in position to trade this crap right there. You talking about chop, 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 chop. This would have ate at our profits right here. This would have tore us up alive. Because we had no true direction. All we did was go literally sideways. That's it. We had no true direction because the move, the distribution had already happened here. So I didn't even play around. I said, you know what? I just want to see us take this gap out completely. Are we going to take this out completely? No, we did not. So, all right, cool. So the Qs, you can see trashy price action. Look at ES. We haven't taken it out on ES as of yet either. Now with ES, we could have traded ES today and could have went and caught this low here, right? We could have caught that low at 1 o'clock. I could have came back at 1 o'clock and caught that low. That's that PM session. You see why my time frames are where they are, where I say, hey, y'all, we're coming back at 1. Look, you're going to always have a move that's going to happen at the key time frames of what I give us. Always. We just didn't have it on the Qs today. We could have had it on ES, but we didn't have it on the Qs. So I just decided to sit out. And now I'm looking to see something that's like this. Now that the market is closed, I'm looking to see something like this where we trade a little bit higher, right? Trade a little bit higher, and then we start maybe getting a little sideways movement. Boom. Breakdown like that. Feeling this. Boom, boom, sideways movement, boom, breakdown, take out this gap, and then I'm looking for a reversal for TGIF, which will be, thank God, it's Friday. We'll be taking a reversal, targeting probably midnight open. So that's my trading plan. That's my bias for the next, the next day. Had to put that out there. because we have not been trading. But now you see the reason as to why. So hopefully it makes sense that I wasn't neglecting us at all, period. I wanted us to be in a position to preserve capital and not trade this because we missed the move at we wasn't up at 2:45 or 3 o'clock. I'm pretty sure you was sleeping in your bed. I was sleeping in my bed. And we missed the move. So we cool. We just didn't trade accumulation today. So we did not trade accumulation. Consolidation. We did not trade consolidation today. So we preserve capital. So we should be back. If we take out this gap here, this is why I made this green box. If we take this gap out, then I'm looking for us to look for longs on tomorrow. That's my plan. So hopefully, we get that. So as you can see, that's how I quickly determine my bias and my reasoning of being in the market, make a little money during Asia. We might, short Asia tonight. I might short Asia tonight while I'm laying in my bed. I may look to short Asia. Or I may just sit and wait until tomorrow. We'll see. So, but that's it. I'm going to go ahead and walk away. It's 5 o'clock. I'm going to go ahead and walk away. And hopefully this live was really, really, really good to be able to help us start building that foundation of what we need to get to the next level. This was foundational, like us laying the foundation, giving us a strategy and a game. Well, not necessarily our true strategy, but we have understanding of what our strategy is going to be. And then now we're going to dial in on the strategy even more within the next videos of what we do on our blueprint. And then we're just going to be building on top of that. And in the meantime, we're going to be trading to be able to add, build up on capital. So we got the play in motion. So, all right, y'all. We'll go ahead and ride out.
What's going on?
If you have any questions, man, just be sure to hit me up so that I can be able to answer those questions for you. But it's your boy Jeremy. I'm out.